Good morning, this is Steve Erdman with EFG Group and IFG Futures. Today we're going to talk about the dollar index, and I'm going to show you a weekly chart, and it's a very simple edge today because we're going to show you the length of the leg in the rally when the dollar index rallied from 2008 into 2009. Coincidentally, that leg of the current rally that started last year is the same leg length. And now I'm going to go to the chart so you'll have a better understanding of what I'm talking about. This is a weekly chart of the dollar index. It goes back to mid-2008, or I'm sorry, mid-2007. And then you see from the rally, from the basically the $71 area up into 2009, we rallied the market past 89. The length of that rally was 18, almost 19 full points, 1900 full points. The exact length of that rally was 18.90 and a half. And I noted today when I was going through some of my charts that the length of our current rally that began in May of 2014 and has lasted at least to this point until today's high of 97.8350, it's exactly the same length in duration. Something else to note on this chart, some sidebars. The market has basically gone straight up since that May 9th low 10 months ago. This is what we term parabolic, and especially on a weekly chart, it's difficult for a market to sustain that type of ascent angle. So it's another rationale or reason that you might want to consider shorting the dollar index. I've got a couple of strategies that I'd like to suggest. They're relatively cheap in my estimation. You can buy June dollar index 94 puts for 24 points. That's, less than 400 points away from current levels. I think it's a good strategy. 24 points is the equivalent of $240. That's before commissions and fees, so you'd have to add commissions and fees onto that. If the market did anything like a 50% retracement of this entire move, you'd see the market move back towards the $87 or $88 level, which is a significant move. And you may want to consider buying some out-of-the-money puts, some deeply out-of-the-money puts, because the multiples, the cost is so cheap, and so treat it kind of like a lottery ticket and buy more of those cheaper options. But obviously you'd need to have a cheaper commission and fee structure to be able to do that. If we take out today's high, the next resistance area, just measuring the little pennant that we made since the beginning of the year, the next level would be 98.32. It's just taking that high of 95.85 minus 93.38 and adding that 2.47 onto that little top of that little pennant formation. If you have any questions, as always, we encourage you to call us or email us, and we'd be happy to help you in any way we can.